Good afternoon, everybody. My name is Ian Campbell. I'm Vice President of Operations at PACICC, and I'm also your moderator for today's webinar. This is the last of 3 emerging risks webinars we're hosting this year, and today we're looking at risk issues associated with artificial intelligence and machine learning, and the implications this will have for P&C insurance. I'm joined here by our guest speaker, Charles Dugas. Welcome, Charles. Charles is Director, Industry Solutions at Element AI. I'll circle back in a moment with Charles and introduce him more formally to you, but first some housekeeping issues. This is a new format we've gone with for our webinars. We're not showing static slides anymore. It's more interactive in a talk show format, conversational sit-down approach. Feedback from viewers has told us you enjoy this much better, and we're not going to be able to take questions during the broadcast, and I do want to thank those who sent their questions in earlier. I'm armed and ready with a number of really good questions for our speaker. I have to tell you, I impressed my kids this morning. I told them that Dad has become quickly the #1 talk show host in the Canadian P&C insurance industry with a show that targets senior risk officials and focuses entirely on emerging risks issues. So they didn't question me at all. They thought it was very legitimate. I thought it was kind of funny. Antitrust compliance I want to talk to you about. We're bound by the Competition Act. The purpose of our webinars is not to collude on approaches to any business strategies. The commentary will not reveal directly or indirectly individual claims, adjusting practices, approaches to scopes of coverage, resolving mixed claims, or practices in managing third-party vendors and service providers. We routinely record all our webinars for on-demand future rebroadcast. Copies of today's presentation will appear on our website shortly, and this will be of interest to members who were unable to join us here today. Our guest speaker is Charles Dugas. He, as I said, is Director Industry Solutions at Element AI. He's a recognized expert in the field of artificial intelligence and machine learning. We're pleased that Charles could be here to speak to us today. We appreciate the fact he just flew in from Montreal this morning to join us. Charles joined Element AI in September 2017. He leads the insurance vertical, helping carriers and other insurance market participants develop a strategic vision for AI and implement AI solutions across their organizations. He has a Bachelor of Science in Actuarial Science, a Master's of Science in Electrical Engineering, and a PhD in Machine Learning with Yoshua Bengio. He has 20 years of experience developing and implementing analytical solutions in financial services, either as an entrepreneur, a professor, or a manager of analytical teams. We're coming to you live from the offices of PACICC. We use our webinars to drill deeper into topical issues that have caught the attention of risk management professionals across the industry. Our webinars connect interested parties across Canada. They might not otherwise be available to attend our quarterly risk officers meetings in Toronto. Interest in our webinar series continues to grow, we're pleased to say. We have senior risk officials from 40 organizations across Canada joining us on the line today, so welcome everybody. And a special welcome if this is your first time participating in a webinar. Element AI transforms large organizations around the world by translating cutting-edge AI research into customizable, scalable, and human-centric AI products. Element AI has a learning-oriented culture, a network of fellows, and deep relationships with a variety of research labs across Canada. They draw talent from a diverse collection of applied fields: physics, applied mathematics, computational statistics, biology, and neuroscience. It makes me think this next 90 minutes of discussion on insurance risks is going to be entirely fascinating to our viewers, or it's going to scare the heck out of you. So I want to begin with, I guess, some general questions for Charles. So first off, perhaps you could tell us a bit more about Element AI and how you came to be recognized as an expert regarding AI and machine learning in the industry, in the insurance industry.
Yeah. Thanks, Ian. Thanks for having me. So Element AI was founded in October 2016. Actually, I just realized that it'll be our second anniversary tomorrow. It was founded by Jean-François Gagné, our CEO, who's a serial entrepreneur, had a couple of successful exits before Element AI. Also founded by Yoshua Bengio, professor at University of Montreal, my former PhD advisor. Also Nicolas Chapados, who was a student with me with Yoshua back in between 98 and 2003 when I was doing my PhD studies. So the initial intent of Element AI was to develop a platform of core AI components, so different applications of AI that together can be packaged into products that can serve specific needs within different verticals, different industries, insurance being one of them. As for myself, I started in actuarial science at Laval University back in early 90s. And then worked for 2 years in pension consulting, went back to school in electrical engineering, got interested into speech recognition back in the days, and then discovered about Joshua. At that time, he had recently joined the University of Montreal, met with them, and then decided to go on with a PhD with them. And then that turned into a startup. So we, back at that time, one of my friends was working as a chief actuary for ICBC in British Columbia, sure, and got interested in testing out the ideas of applying neural networks to automobile insurance. And so that led to a successful research project and gave us the idea to launch a first startup back in 2001, which we ran for about a decade, and then I left in 2011 and joined Aviva Canada. So I've been hovering back and forth between academia, research, AI, and the industry. And now I'm with Element AI, leading the insurance vertical for Element.
And so, how many different verticals is
so we got
AI involved with?
Yeah, thanks. We got 6 verticals, mainly centered around 2 key areas. So financial services, that includes insurance, banking, and asset management. And on the supply chain, we have manufacturing, transportation and logistics, as well as retail. So these are the 6 pillars we've chosen to focus on. We've dropped off, for example, telcos and healthcare. So tough decisions, but at some point you need to focus. That's already a lot on our plate to deliver on.
When it was first established, you had a broad, or it's kind of grown? Did you start in banking and?
So there's been a couple of pivots. So okay. Initially, the company, so there was this idea of developing a platform, but the idea was to become an incubator of right, different companies. So the company moved away from that idea of incubator and decided to develop this platform, but with the intent of developing products for insurance companies, for example. And so that's where we're at. In the past 2 years, most of the focus has been on building these core AI components. So that's, for example, optical character recognition that is now at par with cloud services, natural language processing, object detection for computer vision, and so on. And so these components, again, can be repackaged into industry-specific products. So if you think of automated document processing, which is one key products that we have available, that can be used for processing broker submissions or processing claims in insurance. But that is also applicable to mortgage loan application in banking. And so these products can be configured for different applications within different industries. Yeah. And that's the idea of that's the whole idea of the company, is to make this huge investment in developing this platform with the intent of reusing this multiple times across different verticals. And along the process, to leverage that data to improve the OCR components from banking and insurance application and develop a stronger, more robust optical character recognition that we can then serve to improve the products we deliver to our clients.
In the limited research I've done on this, I'm a newbie on all of this, but just sharing data, that really is what it's all about. Companies, different industries.
So yeah, so there's this notion of sharing. The companies need to be owners of their own models, right, and their own private data. That doesn't prevent us from improving the core AI components, which are non-strategic assets for the companies. They're only the core services. But when it comes to the final applications, that's when you get to a strategic point, and that needs to be owned by the company themselves. Right.
And so just take a primer. We'll start from baby steps, and move right up into integrated data solutions and all of that. But common uses and applications of AI. If you had to sell somebody on the benefits,
Yeah.
what
Okay, so
bumper sticker would
typically when I get asked that question, I instantly get the matrix in my head of engagement, automation, and insights. So that refers back to an article that was written by Tom Davenport and his co-authors in Harvard Business Review earlier this year, where they looked at 152 applications of AI across different industries and clustered them into three types of what you could say goals. Okay. So one goal would be to improve the engagements with either clients or internally facing to employees. So in that category, you find all the chatbots, recommender systems.
Yeah, I have questions on that.
And so Amazon, for example, Google Home and Amazon Alexa would be these kind of applications where you leverage AI in conjunction with your digital platform, because when you have call center, you have a human being on the phone that has the full context of the policy and maybe has the script of what the conversation has been in the past. So when the customer comes to your web portal, they're in a situation where the portal, you would like to have that similar, get your clients to have that similar feeling that the company knows them and makes recommendations that are targeted to their needs and understand the context of previous interactions that have been taken place. So that's really engagement. So that's one key area or goal that you may seek. The other one where we're seeing the largest number of low-hanging fruits, and that I think is a good starting point for AI, is automation or augmentation. So automation means automation of processes, but with the understanding that it is very difficult to get, and in most cases, it is unachievable to get full 100% of automation. And it's going to be a balance between automating certain easy cases and augmenting your workforce for the other cases that can be fully automated.
As a tool for staff.
Yes. Yeah. So the idea is that by augmenting, I mean, the documents, for example, would be processed through the tool and then presented to either the underwriter or adjuster, but with guides or highlighting sections of the document, for example, in a document that are problematic or that suggesting that require the attention. So in that, doing this will allow to speed up that process and make sure that the adjuster pick up on the elements that are important to focus on when they process these documents. So that's why I'm saying this is augmentation and automation. So not only are you able to fully automate a portion of the simple cases, but you're augmenting the other portion, the rest of the cases.
So benefits for insurance companies. I was reading about staff complement. There's a lot of parts of companies that are concerned that it would lead to job loss. The fact that more things are getting automated, are there great opportunities and great risks for companies in terms of staff complements? Where's the big threat for employees of insurance companies, the insurance company of the future?
So if I was an employee, I'd be happy to see my company join AI. And the argument I often mention is that AI is not going to replace you. It's the guy that uses AI that's going to replace you if you don't, because they're likely to be much more efficient. And the solution, again, full automation is rarely seen. It's usually a combination of augmentation and automation. And so the goal is to have augmented workforce to make them more efficient. So if my company is investing in AI, that means they're investing and investing in training myself into AI. So I've seen recently the CEO of Allstate was mentioned that Allstate is investing $40 million in educating their workforce to adapt to new tools, to new environment, because these operational systems and other systems will definitely in the next few years include AI components, and so they need to understand how to work with these new tools, what that means too, and it's pretty substantial change.
And can you see, is it really noticeable, the companies that are using AI and those that aren't in the industry, in terms of profitability and prominence in the
Yeah,
industry?
so
Is
there's
it-
been a McKinsey study recently that showed the difference between, it's interesting, they looked at three categories. So the ones that are laggers, not really using AI, some that have minimal footprint or niche applications, and some others that have taken an approach, a systematic approach, a strategic approach to deploying AI. And they show the actual return on equity differences in the financial services. So they cross these three categories against different sectors of the economy. It is the difference for these companies that adapt a strategic approach is pretty substantial in the results.
Okay, interesting. Just basic terminology: machine learning, deep learning, AI.
Yeah.
How?
Yeah.
I've seen a graph or I've seen a chart where it's all kind of integrated and explained,
Yeah.
but maybe you could, for our viewers, just lead us through that.
So it feels like the definition of AI is an evolving term. So
Yes.
if I look back again to my days at university in the late 90s, AI was really induction rules, so rule understanding or rule definition, and that was considered AI. We were part of the machine learning lab. And so gradually people started considering business rules or rule induction as simple things. And it feels like the term AI is limited to what's the newest thing, what's the new capability,
Interesting.
right?
Yeah.
So it shrank, and then it became that machine learning was considered AI, but business rules weren't anymore. And nowadays you're hearing people say, well, you're not doing AI, you're just doing machine learning, simple machine learning.
So AI is the cutting edge, and
AI seems to be the cutting edge. And so gradually deep learning seems to be seen as some things that can be implemented rather simply, and then you need to go for something more substantial to say that you actually do an AI.
machine learning versus deep learning. How does
So machine learning. So I would say that. So if I go back, AI as a broad term, including pretty much everything. There's different levels of complexity, but essentially, machine learning. The idea of machine learning is that you learn from the data, and so data. There's very limited structural knowledge involved from the beginning. So data is ingested, and you learn from very flexible structure. How to map the data from the inputs to the target. Whereas with traditional statistics, with linear models, there's a very strong structural development that is put in place. So that confines the models within a very limited series of functions. So that brings the need in machine learning to have a very strict framework for developing a model and testing it with other data because of this flexibility and this ability to overfit the data, which is meaning that you'll learn the noise, learn by heart the data, and then that is likely to fail on new examples. So you want to make sure that when you learn this, you do this in a proper way. So that's machine learning, and then deep learning is this idea that, again, going back to my days, doing neural networks for me was one hidden layer. So you'd have the entries. So for example, for pricing, so when we did an exercise into automobile pricing, I would take your age, gender, location, all of these features, give them as input to the model, and then there would be what is called a first layer of neurons, and then the final output, which would be your premium. With deep learning, there's this notion of having multiple layers that gradually encode the data up until the point where you get to the final output. The reason for not doing it in the days was that we didn't know how to train these models effectively, and there was a lack of computational power as well. So that being brought together, advances in computing power and solutions for academic solutions brought the solution around 2005, 2006 to deep learning. That's now what we're seeing. The applications we're seeing are really implementations of deep learning. So in computer vision, speech analytics, natural language processing.
So I can see the quest for more data. It just helps us to learn our customers, learn more about our customers, and better understand them, their needs and whatnot. Has there been growth on the company's part? They're asking more questions of customers, prying more into their. The more you can learn about your customer, the better you can tailor their products around. But while AI is catching on, are companies doing a deeper dive to get to know their customers better, or just more? We had a lot of data floating around. We didn't take advantage of it. Now we're learning about them.
So they are actively seeking external data sources to complement their internal data source.
Oh, interesting.
And so through different means, for example, digital exhaust data is one.
And what is that digital exhaust?
So digital exhaust data is the notion of your browsing history, for example.
Oh, okay.
That's available for real-time advertising, but it's also available for other means.
Right.
So through that channel, you can sort of infer that within a certain region, for example, different profiles exist, or so on and so forth.
So as an insurance consumer, everybody's always worried about you're being watched. You go online and you're browsing this site or that site. What are some common things that companies are doing watching their? How are they gathering external data on customers? What sorts of things? Browsing history you mentioned.
Well, that could be one. Then some of them will. Obviously, you can't tie that specifically to an individual,
Right.
so it'll be aggregated.
Okay.
But there are different. So credit score is one of them, right? So
Interesting.
right. So through linking with credit bureau data, you can gather that credit information that's been around for 20 years. So that's one example, I think, of leveraging external data sources to improve your insights into your clients.
Okay. I came across just in my research, you mentioned neural networks, just a number of terms that are floating around related to AI. Maybe we could go through some of these. So neural networks, you talked about just data and crunching that and coming up with, I guess, ultimately a quote for a customer in whatever line of business they're in. Intelligent agents, what is?
Yeah. So intelligent agents interact with their environment, and so they will seek a certain goal, and so in doing so will generate a certain action, get feedback, and that feedback leads to another action. So that's really a sequence of actions. Whereas if you think of, for example, pricing is just you get one shot at pricing, and then you get a client or not, and so that's a regression problem. Whereas with an agent, you'll have having this sequence of action and feedback leads to what is called reinforcement learning. So you try to give a reward for doing a certain action within a certain context that leads you closer to that final goal.
Okay. Automatic programming.
Yeah, so automatic programming is the notion of writing code that generates code. But then that's always been around, because when you write code, it is eventually compiled into bytecode or binary code.
Okay.
And so again, that definition changes over time. It just means like the layer above, or the level of abstraction above the current way of programming.
And another term was supervised versus unsupervised learning. Is that?
So yeah, so that's an important one. Is supervised learning refers to the idea of that having a data set and having the target associated to each example. So if I look at you, how much should I price you given your past behavior? So I will have a history of your profile, age, again, gender, location, and the results, the ending results at the end of the policy year. So have you had an accident or not? And that I can accumulate with different people. With unsupervised learning, I'd be in a situation where I don't have that target available. What I can do, though, is look at, for example, clustering my clients and understanding what are the groups of my clients.
Geographic
areas, but
age,
profiles.
so,
And maybe create avatars of the different subgroups or groups or segments within my client.
Right. Yeah, that's a big thing. A lot of retailers do that.
Yes.
In segment their customer profiles, and
Yeah.
I've seen it in the beer industry and other places. Constraint satisfaction problems.
Constraint satisfaction problems.
what are we
So
talking
that
about here?
that would mean that your target. So you're operating within a certain constraint on either your targets or your inputs, so that your inputs need to respect a certain number of rules.
Okay. Profitability and that sort of thing.
Yeah, it could be profitability. It could be different things. It could be hard rules, or it can be softer optimization.
Okay. Why is image recognition a key function of AI?
So in the
brought up at
context
one
of
our-
insurance, image recognition or computer vision is very important.
Okay.
Because a lot of processes for underwriting and claims inspection are related to visual inspection of the risk or the accident. So when we look at different pillars, I was mentioning, for example, banking and asset management, that notion of having an interest in computer vision is not really present as much as within insurance. So for example, an interesting application of computer vision is to hail damage inspection. So rather than sending someone attached to inspect the roof, you can send a drone, and then drone will take a video shot of the roof. And with computer vision, you're able to analyze the roof and understand where the damage lies. So not only is that speeding up the process, but it's also much more secure.
Okay. We talked about earlier, larger companies in the industry are certainly embracing AI, and it's a challenge with some of the smaller firms to bring them along, and webinars like this are certainly helpful. But do you have examples of practical applications of AI and or machine learning already being used in the P&C insurance market? Can you think of a company, without naming companies maybe, but have you seen a turnaround or a rise in profitability or customer satisfaction, that sort of thing, with some of the firms that have really embraced AI? Do you have you?
Yes.
Heard
Well,
of practical?
so Lemonade is very popular with their chatbots. There's a big question whether these chatbots are really glorified FAQs, or whether there's true AI going on, natural language understanding and processing of the question, and a very deep understanding of the need of the client.
Is it totally conversational? You can actually have a total chat with a Lemonade bot and think you were talking to a real person? Has it gotten to that?
I'm not sure. So good question. So would it pass a Turing test of saying if there's a wand, and then is that someone behind, or is that a chat bot? And I guess you'd be able to differentiate. I'm pretty convinced that you'd be able to differentiate between a chat bot and a person being behind that.
Because I've heard of some robocalls, and just another application of this, but just they'll stutter and they'll put like you would in conversation with somebody, maybe as a friend.
Oh,
or
well,
somebody,
that's
and
superficial, right? So, but the
it's-
idea is
it's-
that how long
almost
can the
unfair.
sequence go?
Yeah, it's just-
And how can you branch off to a different subject?
Yeah.
And with a chatbot not derailing, that's...
They're working on that, I'm sure.
Well, I'm sure they are, but they're not there yet. I don't think so.
No, funny. Okay. One of our viewers asked, will AI be capable of managing complex risks or only common risks, the 80-20 rule?
So always complexity depends on volume. So if you have a lot of volume then you'll see more complex risks, and that allows you to train your algorithms in a more robust fashion. So initially I see that you should start with low-hanging fruits to begin with, so with the easy case, and then gradually move up towards the more complex risk. That will also evolve over time and we were mentioning the tools changing and the operational systems changing. And one key aspect is to develop human-machine interactions that allow the underwriters and adjusters and other employees to work with these tools, but to teach these tools also. So for example, to in the context of a document processing, to correct the tool and into learning where to pick up the right information. And as that learning mechanism is implemented, that gradually creates a learning company that over time builds this knowledge and that has been learned over time, and then is gradually capable of handling more complex cases. So that will evolve over time again. So starting with some small, simple application or simple cases, and gradually moving on towards more complex cases.
What percentage of the industry right now, the Canadian P&C insurance industry, has, in your mind, really embraced AI? Really taking advantage
So
of
if I
this?
go back to the definition 20 years ago, everyone's on it.
Okay. And now,
So if you narrowed it down to more simplistic or more narrow focus on deep learning AI, I would say a very limited number of companies.
10% maybe.
15%. Yeah.
Okay, interesting.
20.
And one of our members asked, is AI more about selling the sizzle rather than the steak? I don't know if that's
Yeah.
everybody wants to be part of it, but, and I think a lot of our viewers are out there saying, I need to get into this, but I just don't really know what.
So typically
First steps.
There's a hard time. They have a hard time starting, knowing where to start. And we've had a lot of engagement with clients saying, clients coming to us with certain ideas about use cases they want to develop, but not having a clear idea of where sits the best ROI for these use cases. And that's one thing that we typically look at, and that's prevalent in the industry, and that's a consulting framework, is to look at three things: desirability. So is the business really wanting to solve this pain point? Is there feasibility? And so that's where we bring in our expertise, saying this use case is feasible given the data that you have, the task at hand, and then viability. If we solve this problem, is this going to generate benefits for the company sufficient so that to justify that we embark on this project? So once you have these three components to deploy the solution, then you have a good use case to start with. And so they typically come with a few use cases, and then we can expand maybe from this group of use cases to see if there's other opportunities, and then narrow it down to one or two use cases that we'll go and develop.
So consulting with firms in the industry, are they comfortable that if you're providing guidance to one company and another, maybe after this broadcast, calls you up and said, I need to sit down with you and talk about some things, is there a comfort level that everybody knows kind of and by themselves that they'll deal with you directly and not in terms of sharing information, data? Is there kind of one size fits all approach to helping these companies along, or is it really depend on their position, their client base in the industry?
So we have a typical framework of working with companies, and our IP clauses are such that they generally create comfort with the companies that their data is theirs. We don't keep it. We destroy it after the engagement. They keep their models. They're the sole users of their models. So that's usually gives them comfort in that direction.
Things I've been reading about, there's this coming of age where at some point everyone's going to start sharing data, and you'll learn so much more about companies. When's that going to happen?
Yeah, that's a great question. That's
a highly competitive industry, and I could just see everybody kind of.
It's already happening in. So, for example, if you look at Canetics for anti-fraud, so that's already happening, but that's for a specific application where everyone wins. So in a pure competitive environment, for example, recommender systems or optimal pricing, I doubt that the companies would share that kind of information. So you need to look for applications where everyone has a common gains from sharing information. You see that, for example, that's not sharing data, but hail seeding in Alberta, for example, where companies come together, being close to ICLR, I guess you're aware of that process. Yeah. And so the idea is that companies will fund that initiative to come together to fund this, and at the end of the day, everyone wins.
Because it's the unique nature of our Risk Officers Forum that we bring together a couple of hundred companies, highly competitive industry, and it's all about enterprise risk management, sharing best practices. So we have speakers in, we have company representatives speaking in panel discussions about things they're doing, but there's always a little bit of guarded nature to companies, what they'll open up on and share. But generally the understanding is we're all working towards the same goal and best practices for the industry. So
yeah, in the end, the industry as a whole, I guess, wins if collectively we do the right thing in the public's eye and from the legislator's eye as well. So there's interest to collaborate in some of these best practices as well. And AI uses could be one of them as well. So predictive modeling uses and then AI uses could be an area to look into.
I was saying to Charles earlier, we have an annual enterprise risk management survey, and we ask about risks that people need to know about over the next 3 years and emerging risks over the next 3 to 10 years. And lately, or the next 3 years, cybersecurity is a big risk for people. And related to that long term, it's artificial intelligence, the advent of technology, and companies embracing that. So they're kind of commingled, but immediate concern about cybersecurity, and that's very short term, because long term that drops down our list. So do you? Yeah. Is there that underlying concern about the work you're doing, that just cybersecurity is out there and it's kind of the sleeping dog?
I think it's huge. Actually, I'm presenting on this topic later in December. Okay. The application of AI to cybersecurity and cyber insurance. But I think it's an important aspect of the entire society and our economy, because we're all moving into this digitalization, and from the hacker's perspective, that's just a bigger treasure chest to look at, to go after. All of this data is now no longer in paper forms. It's all hidden in this data.
Right.
And we see an increase in the number of attacks and sophistication of attacks, and some of them are AI generated. So of course you need to have tools that match the hackers to defend them off. So it makes a lot of sense to consider where are the areas where AI can be applicable to cybersecurity. And what's most important, that's true for all AI applications, is to get a good education around the capabilities of AI. So if you underestimate the capabilities, you will tend to overlook opportunities and miss opportunities of applying or looking for applications of AI. And overshooting these applications, which we see a lot too, overshooting the capabilities or overestimating these capabilities will lead you into projects that will eventually fail or not deliver on the expectations. So it's important to get people to get educated, just typing state-of-the-art natural language processing, for example, and then looking to see where the technology is at.
And how it can benefit your company and your
what's realistic about chatbots, what's realistic about optical character recognition, what's realistic about speech recognition, and so that you can think of potential applications within the context of the company that make sense.
Okay. That's a kind of a nice segue into, I did a lot of reading, and I copied down some passages from the net, and I thought I'd bounce these off of you and get your thoughts. The benefits of AI and machine learning. A variety of machine learning and AI companies are specifically applying their products to the insurance industry to help them better identify and manage risk and risk calculation, improve underwriting and risk prevention, manage fraud, and provide right sizing of insurance coverage for their customers. In many ways, AI provides augmented intelligence to insurance companies, enabling them to be more efficient and effective when delivering their insurance offerings. Comments on that, or examples you've seen?
It's a long sentence. I picked up on prevention mainly, which I think is very exciting, because of the shift to connected risks. So if you look at automobile with UBI and telematics, connected homes, connected factories with IoT, cybersecurity, which heavily connected risk, having the ability for insurers to follow their risk throughout the span of the policy in real time, essentially, allows them to engage with their clients much more often and to detect and potentially prevent claims from happening. So if you think of true motion, for example, in automobile driving, trying to mitigate the impact of distracted driving, you can see Desjardins that came out with their leak sensors and their alert on your phone, so that if there's a leak, you get an alert on your phone that tells you should get your valve shut. And so there are different applications that are coming that are targeted towards preventing the claims from just happening. And so that allows to improve the results, but most importantly, I think it changes drastically the nature of insurance and the role of insurers from just paying, collecting premiums and paying claims into being much more proactive in helping their clients manage their risks. And I think it's just a beautiful thing that's happening currently.
You're 3 for 3. I'm keeping track here in terms of mentioning companies and having them tune in. Those are 3 companies that are tuned in today. So IBC, Desjardins. And, insurers want to leverage AI in their business practices. This includes core processes and strategies such as the acquisition of new business, retention and account penetration, marketing, channel management, and claims. An optimized portfolio provides the correct balance of products to meet the client's real needs at a price point and terms that seem fair while providing a desirable level of profit for the insurer. So is the optimized balance, is that the big thing with AI, just trying to balance customers' needs? Is that a term that's thrown around loosely?
So when you package all of these, so it seems like it's going all over the value chain of insurance, from all the way from distribution, underwriting, all the way to claims management. What typically happens, and you see a lot of vendors of AI solutions that are point-wise solutions, for example, anti-fraud solution, point-wise solution for fraud detection. You'll see solutions for distribution intelligence, so recommender systems for clients' products. What we're trying to build is what we call a system of intelligence that sits between what we call systems of engagement of your clients, so how they engage with your company, and the systems of records that are your claim system, policy systems, CRMs, that your employees work with. So in between, by building these AI capabilities, you are capable of processing that data before it gets injected into your system, and able to connect the dots between different aspects of your business in order to optimize your decisions and the work that your employees are actually doing. And so that's where I see, like, I truly believe this is the future of insurance, of having this system of intelligence. How it shapes up and how it ends up being implemented, that is something we're working on and trying to figure out exactly. But I can see that this is likely to happen in the future, and that will, I think, enable this ability to perform, to be much more optimal in the decisions that are being made.
We chatted earlier about industries in the financial services sector and insurance. Are we keeping pace with banking and other industries in the
I think
in the sector?
I feel we're leapfrogging.
Okay.
We're not really catching up. We're actually leapfrogging.
Constantly. Okay.
Like, I see the speed at which it's happening, and what I tell people in the office is, I'm here in this role for the next 5 years, and then I'm done. I need to retire or find some other job, or
everything will be different.
Everything will be different. It feels to me that this is a 5-year, like, this big changes are happening, big transformational changes are happening in the industry.
It's exciting, but it's also scary as hell. Yeah.
Well, maybe not for me, but
for others out there, yeah.
I get a lot of the excitement, but I can understand from an insurer's perspective, they are trying to get things in order to implement this. Mm-hmm.
Okay. A report I came across from 2015 predicted radically safer vehicles, including driverless technology, will shrink the auto insurance industry by a whopping 60% over the next 25 years. It's a big concern for insurers, given that auto insurance accounts for more than 40% of insurance industry business on average. Aren't there massive upsides for insurers from business process automation? And that seemed very scary for companies, that it's going to be a disruptor, another disruptor.
So I remember a presentation by former CEO Mark Wilson of Aviva UK, who was here in Toronto. And he had a similar question, and then his answer was that when Aviva was founded, created 300 years ago, there weren't that many cars on the road then. And the idea is that insurance is changing, and it's in the nature of risks that are making up the whole book of business. Currently, and for the past decade or a couple of decades, auto has been a very important piece of the risk we insure. Where that goes in the next decade and what's the actual trajectory to get there, whether it takes 10, 20, 50 years to get to these numbers, is still unclear. But I think what insurers need to look at is other opportunities of other risks. So cyber insurance is certainly one where you see a phenomenal gap between the coverage that is being offered. So if you look at 2016, I don't have the 2017 figures, but 2016 GWP in the US was $3 billion. And the costs to the economy were for $450 billion of cyber events. So 100-fold larger, more than 100-fold, 150-fold larger costs than the premiums, the actual premiums that were charged. So definitely the insurance is not jumping into that, and there are some reasons for that, but this is clearly one opportunity to look into. And then you need also to focus on, and this is gradually, I see that being a recurring concern in different conversations, that you need to focus on intangible risks. Because if you look at the balance sheets of companies nowadays, looking back 40 years ago, balance sheet was mainly driven by tangible assets, so property, autos, and so on. Nowadays, balance sheet is really driven by intangible assets. So what is the protection that is being offered for that portion of the balance sheet of companies or commercial clients? The insurance is not very present there, or could be more present. Could look for new alternatives.
A number of different areas I looked at in terms of the benefits of selling AI to people and companies out there. New business opportunities. AI develops recommendations and selects the best one for the client based on potential value, leveraging the data from the client's profile, past transactions. We talked about previously, accepted, rejected offers from both the client and clients with similar profiles, and regardless of the channel in which this is incurred. These recommendations are pushed to the client customer service rep in the context of the channel exactly when they're needed. So opportunities for cross-selling, upselling, and sales action. They said that AI can be used for cross-selling and upselling, for identifying opportunities based on client situations, making a well-timed and relevant recommendation to the insured and or their agent. And maybe you can comment on this after. And also sales actions. AI can support each agent and channel, tracking each sales cycle and potentially every opportunity, learning from past interactions, and then integrating recommendations into the workflow and associated tasks. That's maybe one of the key areas generating new business, or
Yeah, so all of these applications you mentioned can be handled by machine learning, kind of. So recommender systems. Where AI can come in is to allow to process more complex data to support or enhance the accuracy of these predictions that are made by processing external data sources, for example.
Another was retention and account penetration. A big focus on attrition and the risk of lapse for insurance accounts. By analyzing patterns in customer interactions, household changes, policy roll-offs, CSR calls, content consumption, insurers can now leverage digital insights to identify clients at high risk of lapse. Is that, you're seeing this? Is that the people that are coming to you, are they focused on grabbing new customers, or just hold on to the customers I have? This what I've read, it's a big risk about just trying to use this to hold on to your customer retention. I know with some of the social media providers, it's all about customer retention. If Bell, Canada, Rogers, you just don't want to lose customers.
It depends on the market.
If you're upset with the service, you ask to talk to the customer retention people, and they're on it. But
that depends in a finite pie or market, then retention may be a bigger challenge. In a growing market, I've been to Asia a few times in the last year, where growth is in some areas is pretty important, and the challenge is to handle growth, and so maybe to be able to make sure that this growth is done, and is profitable growth. So how do you streamline your operations so that I can handle more business with the staff that I do have currently, because it's hard to hire. So these are the concerns. So not so much on the retention side, but making sure that the acquisition is done so effectively and profitably.
They're walking a fine line here. I was reading about data collection and profile attributes, and as a customer, you don't want to ever feel that you're being watched or managed or packaged, whatever. But there's a number of things I was reading. For individuals, companies are tracking, are they at a point where they might be starting a family, buying a home? Are they planning for college, or do they have new drivers? Are they coming to retirement age? And for commercial and group lines, is the client growing? Is there additional regulation or new risks that they must deal with? How's their risk portfolio changed? This data can be leveraged by AI. Do you get that? Is there that backdrop that Big Brother's watching you, and there's a little bit of pushback on this overuse of technology that customers are feeling they're being managed, or commercial clients?
I think it's mostly about the what kind of data pieces are being used that's important, rather than the actual algorithms, the crunching machine that is using that data. So if you tell me that you're using my browsing history to price my automobile premium, I may not be comfortable with that.
Right.
And I'm not saying this is,
I can see them
happening,
reacting negatively
but you understand. You understand. So the idea is, I think, for companies to be open about and be open about the data that they're using for different applications. And
is that going on? Like, could I say to my company right now, my insurer, home and car, what do you know about me other than what I've provided on the phone? What are you tracking in terms of?
I don't know the exact the exact legal aspects of the exact, and it varies between different jurisdictions, what the insurers are forced to communicate. But I can see, for example, a lot of insurers will leverage, as I was mentioning, external data sources. I was talking about Hippo that will leverage these external data sources, but will have the client validate that the information that was captured is adequate, or is precise, is accurate. And so that's one way of doing it, is that you just present that data to the client, and then that tells them what are the data points that are being used in a certain context.
And the contact strategy is another retention and account penetration point. They say AI can help determine contact strategies for each client, product recommendations, targeting, timing, channel selection, treatment selection, response analysis, agent guidance, and cross-channel orchestration. And then finally, the other point in terms of trying to sell AI to the industry, underwriting. Pricing. Whenever pricing is negotiable, underwriters are leveraging underwriting guidelines, risk levels, and their own experience around what the market will bear when quoting premium and negotiating with agents and clients. With AI, the system can review books of business, identify risks similar to the one being underwritten, and make a recommendation around pricing. In effect, win the business without leaving money on the table. If it's that easy, why aren't companies embracing this more? What's holding them back?
It could be limitations on data availability internally, so legacy systems that make it very costly for them to implement these solutions. It could be reluctance from the front line to have that automation or oversight. And it could be that there's a lack of belief that this will lead to better results. So they need to be shown that this actually works before they decide to embark.
Okay, so let's play devil's advocate, and I've branched into other areas that the reading I was doing online. Government regulation.
Yeah.
Playing devil's advocate. You're watching companies are watching customers, and they're really tracking very closely what they're doing, behaviors, habits, and stage managing some of the accounts. Should AI risks be regulated?
Yeah. So companies are currently using a lot of predictive modeling, and if you look at, you break it down to different steps, you use a certain data entry inputs. There's a certain predictive modeling that is being used, so, or it could be a simple GLM, linear model that is being used for pricing purposes, and then there's a final output. So where the legislator has been active is in saying, here are the features you're allowed to use. So for example, in Ontario, you're not to use credit score for automobile pricing.
Okay.
And so that's one constraint from the get-go. What kind of data are you able to use? The second piece is constraining on the types of models and the actual model parameters. So for example, you could be forced, or you are forced to justify changes in rates and explain why, what kind of data do you have to support these changes. And so that's drilling down into that model that is mapping from the data, the inputs to the output. And then you can confine the decisions that are being made in some sense, so capping and some other decisions that you can prevent. And so when you look at AI, there's a similar structure. So you have data that come in, you have a more complex machinery in the middle, and then you have an output. And so you could replace the current process with this new AI model. The problem is in explaining what's going on in the machinery, right? So the same structure can be, or same constraint can be applied to the inputs or the outputs, but when it comes to understanding what the machinery is doing, that is much more difficult. And there's a lot of work being done in developing solutions for explainability of AI. That's an actual field of research to allow for better explanation. But obviously you cannot draw the same conclusion or same easy conclusions as with a linear model. And so that's where I see that this is going to be a challenge for legislators to do the right thing in that respect.
I can see there's been growth in almost this permissiveness that I look at as an outsider looking in, that you can get lower car insurance rates if you don't mind your company using tracking in your car to your hard stops and your fast acceleration, all of that, and potentially, I think, hold out a 15% reduction in premiums down the line. And now they're going into the healthcare, that if you're wearing a Fitbit, that sort of thing, if you're providing health information, we can lower your premiums there. Do you think it's kind of, sometimes we have to help consumers along with regulation to protect themselves, but do you think it's you're comfortable with what's going on right now in the marketplace, that companies are giving consumers options to lower prices, and they're walking into this eyes wide open very knowingly, and they can generate savings? Or who's winning in this? Is it consumers? Is it companies?
So this is not a specific question to AI.
No.
It's general questions about the industry as a whole. Whether it's a trade-off between discrimination and subsidization, what I think is you have the opportunity, the ability, I have the ability to know much more precisely what your risk is, either for life insurance or health insurance or car insurance or home insurance. But I will force myself out of knowing this so that I don't give you a better price at the expense of someone else who should get a higher price if I knew this piece of information. So that's, when I do that, I kind of implicitly subsidize that other person, because you're a good driver. I could give you a price aligned with your driving habits, but I'm not doing so. I'm prevented from doing so because there's this notion that we want to prevent from discrimination.
Right. Okay.
And so that's happening already in different respects. So that's exactly what's happening with auto insurance, with credit score not being used. You don't want the legislator that said you cannot discriminate based on credit score. Yeah. Okay. And even the three parties were hinting that they would want to remove postal code rating, geographic rating.
That just came up a couple of weeks ago.
Yeah, so that's still on the table. So this idea of discriminating against yourself because you're in a neighborhood where there's more accidents.
It's how you look at it, though. I mean, it's something you can name neighborhoods. I know in Toronto, neighborhoods are very busy, very congested downtown. great propensity for accidents, and others are less busy, and then other people look at this differently, and they'll say affluent neighborhood, you know, more relaxed lifestyle, and no cars on the road, and other places very dense, low income, and you're, so it's...
Yeah, well, you're, I think there can be explanations as to why this would make sense, but I think the interesting question is really that that's the nature of insurance as it's been going on for the last 300 years, is to try to get information on the risks you're insuring in order to give the right price. And so what we're faced with currently is the ability to gather much more granular information, much more precise data, and that leads us to face ethical question around what do we as a society accept?
What are we comfortable with?
How far are we accepting ourselves to let this go in towards full discrimination?
Right.
And so at some point we need to draw, there's already a line in the sand, it's just that
notionally, but not...
So we need to revisit this in the face of what's now available.
Perfect segue. There are no international regulatory standards for AI and machine learning. How do you see this evolving?
So there will be some coming. I've seen, for example, countries have signed declarations around banning autonomous weapons, for example, and that's one area where you can see that countries are collaborating and regulation is happening. And so it'll start by addressing these very important questions and issues, and then eventually I guess it'll trickle down to more.
Where's that going to come from? Where's the pressure going to come from? Is it Europe? Is it North America? Where is...
Well, you see GDPR in Europe, that's been established as a standard for data specifically. So that certainly has an impact on the ability to develop AI solutions out there. And that's one area that I see will be important, is how companies are able to leverage data and what are the restrictions around the use of data that is imposed on them, and that will impact, like if I go back to my analogy, the first box of the data that comes in, that's going to have an impact on that aspect of the AI applications.
Another question came in. Regulators could also find it difficult to identify who's made key financial decisions that go wrong. With integration, sharing data, there is a point where who's responsible for that? We had technology with autonomous vehicles, the technology to drive the car. The driver's not driving the car because it's the technology, and it's not the manufacturer of the car, it's actually the manufacturer of the technology that's driving the car. So how do you point the blame when things go wrong? Is that going to complicate things? Is that...
Yes. And what's going to complicate things is also the ramp up towards level 5 automation, which is full automation. Along the way, you get level 2, 3, 4. And in each context, the liability lies on a different entity, depending on the level of automation. So if you look at level 2, level 3, level 3 allows you to be distracted and not necessarily focused on the road.
Right.
Whereas level 2 forces you to be able to pay attention to the road. And so this...
We're kind of moving...
Yeah, so in the case of an accident, you need to figure out whether the person was actually distracted or doing something else. If they were, what was the level of automation that was in that car at that moment. You need to look at the latest software update in that car, because that's how it happens, right?
I mean, there's cars on the road, 15-year gap probably in the average car on the road that you'll see, and there's just some are just driving with basic brakes, that's it.
Exactly.
And others have, you know,
so you have
lane departure and stopping.
Yeah, so you'll have roads filled with cars at different levels of automations that interact.
It'll take generations, really. Probably 2 generations to cycle through to everyone's got the base of, probably the best technology now will be 2 generations from now. That'll be the base level that everybody will be driving with.
Yes. Well, you'll actually, I guess you'll have to force people off the road at some point if they, with their collectibles.
Right. I've got a couple
if you want to make sure that everyone's fully automated.
Okay. Do you foresee that regulators will require AI algorithms to be disclosed? That's a question from one of our members.
Yeah, so why not? I just don't know what they would do with it, given the complexity of
Proprietary
these.
information, right? There's just,
Yeah, but it's already happening in different contexts that you have to disclose to the legislator your models that are being used. So with fiscal, you have to file your rates.
right.
So would you have to file your neural network, your full deep neural network? Then what would they be doing with it? Because if there's a million parameters in there, how they're going to find their way? So they may have some. You need to understand first what would they do with an AI algorithm? How would they test it? I think it would be more about one key aspect and we haven't touched on this, but it is the bias in the data that is present in the
That
data.
comes up. I've got questions on there,
so,
yeah.
that's telling me that this is a pretty important issue. Is that if you have biased data to begin with, you will have biased outputs, and that's true of any predictive modeling. It's just that with AI will probably leverage or make that much more important issue. So there are techniques to remove this bias or to mitigate this the impact of this bias available there.
So what
present
a
there.
bias that companies may employ? What,
Yeah, so,
what would be an example?
For example, there are some examples that are known of a model being trained with mainly male images that would have a lot of difficulty recognizing women, and so in a context of biometrics, for example, you'd have better security for males but lower security for females, right? So that could be an outcome if you don't have enough data to work with to distinguish between females. So same story in different contexts. And so that is an area where the legislator could be looking into to make sure that bias in the data, techniques that are available are implemented to mitigate the impact of bias before the models are rolled out.
And you've got to have comfort in the industry that the regulators, like you say, actually have the capability to understand the data you're presenting to them and can use that in best practices to regulate how you're behaving.
It can be in the form of tests or designing framework experiments or test frameworks that insurers must run through to validate that the performance is such and such, rather than looking into the finer details of the actual model.
One of our viewers asked, what credibility level, percentage-wise, is anticipated for AI to be used in regulated frontline applications, such as underwriting?
Yeah, I think again, I'll bring it back to automation and augmentation for underwriting. You may ask that a certain level fix the threshold of credibility for AI to be used, and in that context, the AI, if the credibility is sufficient, then you're allowed to use AI. Otherwise, you revert to an underwriter, and that's augmentation rather than automation through AI. And that's how I see it. So you could have a threshold, and rather than saying AI or no AI at all, it's AI within certain contexts. If credibility is above a certain level and underneath, then there's only augmentation rather than full automation.
Okay. Integration, we talked about the sharing data and how companies become more integrated going forward. Replacing bank and insurance workers with machines risks creating a dependency on outside technology companies beyond the reach of regulators. The Financial Stability Board said last year. Expected rapid growth in AI also raises a prospect of outside technology players expanding their influence over the finance sector. Said FSB, this could in turn lead to the emergence of new systemically important players that could fall outside the regulatory perimeter. We're a year down the road. Is the risk greater here now? The concerns they noted here that it's players that aren't being regulated currently that have a hand on the market. Are we?
So they're getting their hands on the market. How far they'll get remains to be seen. So if you look at Amazon, for example, where Travelers is now selling through Amazon, same with MapFre in Spain. Google just made an investment in an applied system recently, so they're gradually putting their hands in the industry. Whether they will be able to fall out of regulatory frameworks, I'm not too sure. It feels to me that they're just very efficient mechanisms, and I see that distribution is going to be very impacted by these players. But the other aspects of the value chain, less so. That's how I kind of see things shaping up.
Okay. Another question related to integration. If a major AI provider went bust, it could lead to operational disruptions at a large number of financial firms all at the same time. Is this threat real? How real?
Well, you need to ask for the code to be under escrow, for example, so that if that provider goes belly up, then the company has ownership of the code. You need to make sure that you have the capability to run that that AI model.
These are things regulators should be looking at, obviously.
Yeah. I think the AI models can be made sort of static, so that what could happen is that a model stops evolving over time, and so because you don't have the capability to make it evolve, that will lead to a gradual performance degradation because the world changes and the data changes and so on and so forth. And that's kind of what I see as the risk currently. If you have a self-learning predictive model, then you need to place gates around the decisions that are being made to make sure it evolves, but does not derail in the wrong direction.
Risks to the industry is a whole different branch. The first one, privacy. The FSB acknowledged that AI is helping the financial sector to cut costs, improve profitability, and widen choice for consumers, but added to that, it also raises concerns over privacy of data used in AI applications. What are your thoughts here? Should we be worried about this? Is it being managed properly? Are there renegades out there that?
So, again, I don't see that AI is a more sophisticated box, and the ability to constrain the data that is being used should be independent of that box. Okay. So whether it's a simple predictive model or it's a full-fledged AI deep learning model, I think the same constraint apply. It's just that the way the data is consumed and modeled can be much more accurate and much more complex and difficult to understand clearly. And that ties back to explainability of AI, explaining why is addition being made and what are the reasons that explain that this result is so high or so low. So these are areas that are being developed and that we're trying to build into our products as well, gradually as they come available through the research.
Okay. Cybersecurity, a comment came in. AI is enabling new forms of cybersecurity threats with subsequent risks for individuals and businesses. Cybersecurity and cyber theft coverage are two of the hottest growing areas of insurance coverage for businesses. You see that's something that's going to continue indefinitely.
Yeah, for a long time. Yes, okay. For sure. Yeah, it's growing in importance. It's a growing concern, and I think the penetration of cyber insurance within SMBs or small and medium businesses is going to grow.
It's just looking at the responses that came into our ERM survey. They said next few years we'll sort out cybersecurity and then it'll kind of drop off the map, and it's technological change we'll have to be worried about long term.
I don't see that.
You don't see that? Okay.
I don't see that, no.
Okay, but not as an emerging risk. It's here now, and we have to deal effectively with cybersecurity. Okay. Liability, big area of concern. Will insurance companies cover business losses when an AI system inappropriately performs some action or causes some harm that a human would not otherwise have caused?
So
this, I think, goes back to what we were talking about earlier about you're driving a car that's equipped with AI technology, and it's who's to blame when something goes wrong. If we do you think it's totally sorted out? It's crystal clear out there right now,
No,
or is
certainly not.
it'll evolve
It will evolve for
new
sure.
technology hits the market?
It will evolve for sure. I heard that there was a statement that AI autonomous vehicle will kill dozens of people,
Right.
but it'll save thousands. And that's, and
Like a-
people tend to focus on this one case where this Uber car killed
Yes,
a lady on
yes,
the road, and there may be some reasons for that, and that could have been handled better. But over time, ultimately, I think the savings, life savings, will vast outweigh the errors that we're seeing currently.
Okay. Regarding algorithms and ethics, how can we prevent control bias discrimination?
Yeah. So again, bias. This is something that is being developed. There's generative adversarial networks, a type of neural networks that can be used to mitigate these biases in the data. So that's an area of research. There are some techniques that are available out there. So I recommend that people look for them and try to see how they can be applied to their unique situations. But that is evolving for sure. This is a main concern with all the big tech giants. So Google are all concerned with this bias in data.
Because the way it's set up essentially will give you the answer you're looking for. If you set certain parameters, an inherent bias in the system is going to present.
Yeah, inherent bias in the original data that you're
Right.
using to develop your AI is going to generate a bias in the output, and your decisions that are being made.
And the solution to this, is that going to come at the company level? How's that going to be? How are we going to get to that?
There
where
was a
we-
recent interview with Joshua Benjo where he suggested that legislators should force companies, and he specifically mentioned insurance companies. The legislators should force companies to implement these techniques that are in existence to make sure that the bias is removed as much as possible. Now, the trade-off here is that if you implement these solutions, is that the accuracy drops somewhat on your model. So you're less predictive, you have a less performing AI, but you have removed the bias to the best of your capabilities.
The next question was all about, I guess, disruption in the industry. We've seen, I think, as an industry, we're mature and we've accepted the car sharing and the room sharing and all of that. Rapid technology or rapid advances in technologies in the next decade will lead to disruptive changes in the insurance industry. The winners in AI-based insurance will be carriers that embrace new technologies to create innovative products, harness cognitive learning insights from new data sources, streamline processes and lower costs, and exceed customer expectations for individualization and dynamic adaptation. It sounds like something almost your firm would have written.
How can you say no to that?
Right. Most important, carriers that adopt a mindset focused on creating opportunities from disruptive technologies instead of viewing them as a threat to their current business will thrive in the insurance industry in the future. And so how do we convince the people out there that don't believe that? Do you think as an industry we've moved over and said, okay, we're all in on this now, or are there still?
I think so. I
people
think
see this
there's
as new math?
what I see and I hear is a lot more desire to get on board with AI and the need to change, because I think at this point there's fear in the market that disruption may come and it may hit hard. And if they don't do something about technology, AI, and not just AI, but other technologies in particular, embracing new systems and getting rid of their technical debt, then they will get disrupted. So they need to move on and get on with their AI journey and other transformational journeys as well.
What's the next disruptor you can see? Is there a natural? We've seen it with car insurance, with in the hotel industry sharing. Is there a next disruptor that you see that emerging?
We see them. They're all over the place. What's the newest one? Honestly, I see them in every aspect. So
we did
life insurance and in health insurance and Could be in in the U.S. We're actively looking at worker comp insurance. That's an area where you can see disruption too. Yeah.
Okay.
So there's not too much there.
Okay. We did a segment last year on on-demand insurance. That was a big, just using things when you need them, as you need them.
On-demand certainly as a framework for, in terms of, I'm looking at lines of business that are drastically changing. I see, for example, marine insurance with IoT, self-driving ships. That's also exciting.
That comes up here. Yeah, okay.
That's
kind of bizarre.
Exciting.
As long as it's not tankers. So it's kind of concerned about that.
A little bigger than your car to go.
Yeah. More damage.
Yeah. So these lines of business are being disrupted, and then the business model of how insurance is consumed and bought rather than sold. That's what a lot of people are trying to figure out. How do I make insurance be bought rather than sold?
Oh, interesting.
And so that's an interesting aspect. So on demand, I think, is very popular. Yeah.
I gathered information on trends in the industry related to technology, and maybe I could get comments from you on this. An explosion of data from connected devices, the penetration of existing devices, cars, fitness trackers, home assistants, smartphones, smartwatches will continue to increase rapidly, joined by new growing categories such as clothing, eyewear, home appliances, medical devices, and shoes. Insurers will understand their clients more deeply, resulting in new product strategies or new product categories, more personalized pricing, and increasingly real-time service delivery. So for your firm, that's very exciting. More data.
Absolutely. Connectivity, so as I mentioned, connectivity leads to opportunities for prevention, better engagement, and of course AI can be used to run these engagements.
But also to track what consumers are doing, right? Modeling behaviors.
That's much better insights into your risks. So that's connected risk. I think dematerialization, as we mentioned, the weight of intangible asset, which is year over year growing, is still happening. So you mentioned car sharing, for example. So that's less cars being bought.
Huge.
And for example, you no longer pay for DVDs and CDs since everyone's using Netflix and Spotify. So it's just subscription based. So it's dematerialization of the society. So that's pushing towards the need for protection around intangible assets. So that's a key trend that we see. One area that's mainly what you mentioned about tech coming into that space is blurring lines. So reinsurers moving into the direct insurance space, tech giants looking into insurance. So that's creating fear and uncertainty around where disruption is going to come from. It used to be that you were competing with a finite set of players. Now it seems that they could come from any direction.
Another increased prevalence of physical robotics. We've seen or are seeing now 3D printed buildings will be common, and carriers will need to assess how this development changes risk assessments. In addition, drones, self-driving cars, autonomous farming equipment, and enhanced surgical robots will all be commercially viable in the next decade. You think that's true? That's coming in the next decade? Is that...
Well, we're having these questions already. So one insurer, actually reinsurer, asked us, how do we insure AI software? Because in the end, self-driving cars will be driven by software, not people. And so they need to look at this software and evaluate what is the risk of that software leading to an accident. Same with self-driving ships and this 3D printing. So you can actually look at the algorithms that is used to print these buildings and assess how sophisticated it is that it will.
How much risk you're taking on.
Yeah, it'll help mitigate risks.
Another trend, they talked about open source and data ecosystems, and we talked about this integration. I don't know when it's going to happen, but various public and private entities will come together to create ecosystems in order to share data for multiple use cases under a common regulatory and cybersecurity framework. That kind of seems like nirvana down the line. This beautiful sharing of information, everybody benefits is I don't see that happening anytime soon. Do you? Is it everyone's fairly guarded about?
Again, it's going to come for specific use cases where there's a common gain of sharing data. So if we can talk about Canetics here in Canada for auto insurance, but in the UK there are some consortiums of data that involve insurers, banks, telcos, so different industries, so much larger data pools that are used for specific applications. So I doubt that would come available for competitive purposes, that insurers would gather together to pull their data in that regard for retention modeling, for example.
I had a number of next steps for the industry. What are key foundational steps companies need to do now to prepare for and move forward in the AI space? That's a question that's coming from a member. Thank you.
So in preparation for AI, in our engagements we discuss with different verticals, and we frame it around 4 buckets. How to prepare is to prepare with data. So obviously you need some data, but to look at your data assets and whether you're currently collecting data that will allow you to develop AI in the future as well. So we run into a lot of companies that do have these data assets, but they're not, for example, labeled, and so you don't have a target associated to a certain piece of data. So that requires a certain bit of preparation work to be done. So we've developed tools to enable that, to facilitate this work. But obviously that's something you need to look at. Technology that's available. So have you been able to deploy have you gotten some comfort with the cloud? And have you been able to migrate your data assets to the cloud, which will lead to important cost savings when you decide to develop AI? That's an example. Talent is also important. So you need to have internal talent and decide what you want to build on your own, what you want to partner for, or what you want to buy from vendors. And be realistic about your capabilities to hire the talent to deploy AI. And then you need organizational readiness. Usually it's organizational buy-in, so from the key stakeholders in different areas of the business to say this needs to go on. And so if you have these 4 key ingredients, then I think you're in a good shape for AI.
I think you may have answered my next question, which was what are the leading or best tools available for developing, implementing AI and machine learning? But you've touched on those are preparatory steps.
So for machine learning, you're talking software tools. I see that in terms of data science platforms, for example, I hear a lot about Data Robot that was launched by 2 former Travelers data scientists. So it's very interesting that this platform has been built from the ground up with the knowledge of insurance. So that shows in their product roadmap. I also hear a lot about H2O as a good platform for automated machine learning. In terms of AI, so these are tools that allow you to develop some predictive models internally. In terms of providing AI services and products, there's a lot of key niche players in different aspects. But in terms of providing a full-fledged core set of AI services, I see very few players, and that's where we want to go in, where we're jumping in with developing this unified platform that allows you to develop this full-fledged system of intelligence.
You're coming at this from knowledge sharing. We talked about what companies can do to prepare themselves internally. What certifications are recognized in the industry for analysts who would like to specialize in machine learning and AI?
Yeah, so they're not that's an issue, I think, because it makes it harder for companies to hire these people or to understand who's qualified or not. There are some good courses online, some Coursera, for example, EDX, and other platforms for online learning that will have pedigrees with multiple courses so that you can follow. And so that's something you can put on your resume. and usually that's well recognized. But there's no formal, I don't see any formal besides, graduate studies.
Okay. I think that's probably, I can't believe 90 minutes have rolled by that fast, but it's probably a good point to stop to conclude our discussion now. I want to thank Charles for hosting and for being here today, providing valuable insight into artificial intelligence and machine learning and the implications this will have for P&C insurance business. I am sure you're going to hear from our members with further questions on this. A copy of the webinar will be posted on the PACICC website under the Risk Officers Forum tab. You'll see that shortly. I'm going to ask webinar participants to complete a brief follow-up satisfaction survey. Your feedback helps to ensure the quality of future broadcasts, and I invite your thoughts on future speakers and subject matters. Next event is our Risk Officers Forum meeting taking place next Wednesday, a week from today. Our keynote speaker is Louis Desrochers, President and CEO of Heartland Farm Mutual, Inc. He'll provide a CEO perspective on ERM. We also have AM Best P&C Ratings Division representatives joining us, Raymond Thompson, Associate Director, and Gordon McLean, Senior Financial Analyst. They'll be discussing AM Best's stochastic capital adequacy model, as well as the impact of ERM in AM Best's ratings methodology. We'll also have an industry panel that will be providing commentary on what they heard that morning at OSFI's Risk Management Seminar taking place in the morning. It's an exciting agenda. Hope you can join us for the forum meeting. I'll be issuing a final reminder for registration shortly. You're going to see that, and it's your chance to sign up if you haven't already signed up for that. I want to thank our friends at EventStream for amazing technical support today with today's broadcast. This concludes today's webinar. We look forward to having you join us for future sessions. Thanks for tuning us in, and goodbye for now.